This video is for educational purposes only and strategies that I use in my personal portfolio. Nothing in this video guarantees profits or future performance. Listen to me very carefully. You are trying to invest your hard-earned money into one of the most deceptive, dangerous, and outright confusing times in modern stock market history. If you look at the surface, if you just dig into your brokerage app and look at the S&P 500 or the NASDAQ, everything looks perfectly fine. Looks like a roaring bull market. But if you lift up the hood of this vehicle, you will see that the entire engine has been ripped out. The reality is Wall Street isn't telling you that over 60% of individual stocks are actually down double digits from their highs. We are living in a masked bear market. Because of this, millions of retail investors are falling into the massive wealth trap right now. They are doing one of two things. Either they are panic selling out of everything, missing the real opportunities, or they're letting FOMO drive them into overvalued, hyper-cyclical hype stocks that are nothing more than a gamble. If you want to build true generational wealth in this game, you cannot buy when everyone on CNBC tells you it's safe. You have to learn how to buy when it feels absolutely uncomfortable. The amateur traders are getting absolutely slaughtered right now because they don't have a plan. But in this video, I'm giving you the exact blueprint to navigate this turmoil. I'm going to break down 5 legendary household name titans that smart money is quietly accumulating while the retail crowd panics. If you skip a single minute of this video, you are voluntarily leaving money on the table. Pay attention, strap in, sit tight, don't skip any part of this video because what I'm about to cover will give you the tools you need to define your financial future over the next 1 to 3 and 3 to 5 years. Now, before we get into today's video, remember, no more than 5 to 10% of your portfolio in any one stock. The market is volatile, it's risky, there's no guarantees. And with all of the volatility and the prices going up and down, be safe. And remember, any of the stocks I talk about, make sure they fit your personal goals and need for your portfolio. Do not take inherent risks and do not just blindly add stocks. The market is volatile. And if you want to make money, you have to be safe and consistent. Protect your capital. The market is crazy right now. Before I continue on in this video, I just want to remind you this Friday, July 3rd, 6 p.m. Eastern, 3 p.m. Pacific, my free masterclass webinar returns yet again. You do not want to miss this opportunity. Every single student that's ever attended the webinar said they've learned more in that 1 hour with me than anywhere else. I will be going over my dark pool, hedge fund, psychology, and technical analysis strategies, my AVP, stochastics, RSI, DFib, and squeeze RSI indicators, and showing you exactly what you're missing out on. You don't want to miss out on this. I have a huge announcement, something I've never done before. I'll be taking your questions and answering them, and I have a huge opportunity that you do not want to miss. Every single webinar in the past, students have come to me saying, I want to join the webinar last minute, and it's too late. We are full. Very limited spots remain. Link to register for the webinar is below. I look forward to seeing you this Friday. Let's go beneath the surface and look at what is actually happening to the tech sector right now. The big narrative driving this mass bear market is an absolute crisis of capital expenditure. Look at giants like Meta. Meta is currently locked in a dangerous hurricane phase because its projected capital expenditure is skyrocketing towards $145 billion. While its estimated net income is sitting between $80 billion and $90 billion, do the math. Their net income cannot even cover the capex. If Meta's revenue growth falters even a fraction of a percent to offset this bleeding, this stock is headed straight down to the Chinatown. We're talking about a drop to $350 to $400 range being potentially possible. And it's not just Meta. Look at Microsoft and Oracle. They are playing the exact same high-stakes game, pouring billions upon billions into cloud AI infrastructure. If these companies do not absolutely maintain and accelerate their earnings to justify these eye-watering expenditures, the tech sector is going to experience a pretty brutal reevaluation, potentially. To make matters worse, look at the macroeconomic data that came out just a few days ago. The market is in absolute turmoil because the core economic data came in showcasing a stubbornly strong, inflated jobs market and core consumer inflation ticking up to 4.1%. This completely shatters the narrative that economic pressures are cooling off. Because the labor market and inflation are refusing to back down, the Federal Reserve under Chair Kevin Warsh is actively floating the threat of a looming interest rate hike, with major institutions like Bank of America warning that a 75 basis point hike could be slammed onto the market before the end of the year. This is a massive supply side shock, and it's why major indexes are swinging wildly while individual stocks are completely capitulating beneath the surface. Before I pivot to exactly how we need to play this, I need to share something personal with you. Just 7 years ago, I was completely bankrupt. I'd lost everything. Went through total financial devastation. position. And if you dropped me into this current market turmoil back then, I would have panicked, made the wrong moves, and lost every single dollar to my name. But going through that fire taught me a true opportunity doesn't look pretty. Opportunity hides in the chaos. If you're sitting there right now losing money, if you're having trouble making consistent gains, or you simply look at this market and you feel completely overwhelmed, I want you to understand that you do not have to fight this battle alone. I built my private Discord community for one exact reason: to teach you the proprietary hedge fund, dark pool, psychological, and analytical tools that completely transformed my life. I don't just sit here and lecture you about theory. I trade these exact same strategies every single day in my personal portfolios. It is the precise methodology I used to grow my micro challenge account from $900 to $9,000 in just 14 months, and how I took my $250,000 portfolio to over $2.1 million in the exact same time frame. And as you can see right here on the screen, these are the real verified results from my students who are using these exact tools to bank consistent profits in the middle of this exact market chaos. I was raised in a Catholic household, and my parents always told me to do the right thing and to give back. Now, I'm far from perfect, but I do make strides and efforts to help as many people as I can. And when I finally achieved financial freedom, I knew my true purpose was to help others do the exact same thing. I've always been this way. Every Christmas and Thanksgiving, my brother and I go straight to the homeless shelters, hand out pizzas, hot food, and support the people who need it most. When my mom shattered her leg 2 years ago, I was able to build her absolute dream bathroom that she could never have dreamed of affording on her own. And just a few months ago, when my brother went through a massive, brutal divorce and lost his car and a lot of money and faced bankruptcy, I walked out and bought him his ultimate dream car, cash. You guys can see that video right there on the screen. He was shocked, blown away, and couldn't believe his eyes, and hugged me for several minutes. And after that, he's told me how much he loves me, that he really appreciates me, and I was able to help him through this rough time. And I love helping people. I love giving back. I want to help you take control of your financial destiny and build your market knowledge, secure your future. Do not hesitate while the market leaves you behind. Take your opportunity right now. The link to join Discord is in the information box below. I look forward to helping you grow your portfolio. Now, let's talk about how we compile all of this data to protect and grow your capital. The casual investor sees the economic turmoil, the threat of Fed rate hikes, and the massive geopolitical risk skyrocketing with the Iranian tensions in the Middle East, and they freeze. They see the headlines about global conflicts threatening the vital shipping lanes and supply chains, and they run to cash. But the smart money looks at the landscape and asks, which world-class bulletproof businesses are being completely thrown out with the bathwater because of short-term macro panic? Instead of chasing unproven fintech platforms, hyper-cyclical chip manufacturers, or unprofitable tech hype, we are positioning ourselves in companies that possess immense pricing power, unbreakable consumer habits, and institutional dominance. We are focusing on massive, well-known blue chips that have reached deep seas of technical capitulation. These companies aren't going anywhere. Their balance sheets are rock solid, and they are priced at an absolute discount. I'm done talking about the macroeconomic landscape. I'm stepping out of my kitchen right now and into my office so I can pull up the charts and look at these exact price levels with you and tell you all about these stocks I think you should be looking at right now. Now that we're looking directly at the charts, let's start with Microsoft. Yes, as I mentioned earlier, Microsoft carries a higher level of short-term risk right now because of the massive capital expenditure required to maintain their dominance in the AI cloud race. But look at where the price is sitting right now. We have pulled back directly into a major technical capitulation area and key historical support. Microsoft isn't just a software company, it is the infrastructure for global business. Wall Street analysts are incredibly bullish here with a consensus 6 to 12 month price target mapping out a clear 15 to 20% upside, and the 1 to 3 year targets looking at sustained double-digit compounding as their Azure cloud AI integrations fully monetize. This is a foundational titan sitting at a prime accumulation zone. And as you can see, 372 right now is very cheap compared to its 52-week high, which is way up here at 543. Essentially, there is more than 30% upside just to the recent 52-week high alone. The next stock I want to take a look at is Meta. You can see the pure technical capitulation on the screen right here. The market has severely punished Meta, and this is because of Zuckerberg's massive $145 billion capex and AI and cloud infrastructure spend. This makes it riskier in the near term if their advertising revenue experiences any micro hiccups at all whatsoever. However, we are looking at the technicals, and the stock is deeply oversold and sitting right now at a major long-term demand zone, as you guys can see down here at $550. The company is trading at an incredibly cheap forward PE ratio multiple relative to its growth. Analysts still see massive value here with a one-year consensus target pointing to a strong recovery back towards the all-time highs, and the 3-year projections estimate that once this heavy investment cycle peaks, Meta's free cash flow will explode, easily driving the stock past the $1,200 to $1,500 range. You have to buy the hurricane if you want to own the sunshine. That's what I tell everybody all the time. You can see here $550 is over $225. Actually, it's more than that. It's $230 below the 52-week high. So again, there's like 30%, 25, 30% potential upside here in the next 6 to 12 months, depending on how CapEx goes and CapEx spending. This is very important to understand. Before I continue on in this video, I just want to remind you, this Friday, July 3rd, 6 p.m. Eastern, 3 p.m. Pacific, my free masterclass webinar returns yet again. You do not want to miss this opportunity. Every single student that's ever attended the webinar said they've learned more in that 1 hour with me than anywhere else. I will be going over my dark pool, hedge fund, psychology, and technical analysis strategies, my AVP, stochastics, RSI, DFib, and squeeze RSI indicators, and showing you exactly what you're missing out on. You don't want to miss out on this. I have a huge announcement, something I've never done before. I'll be taking your questions and answering them, and I have a huge opportunity that you do not want to miss. Every single webinar in the past, students have come to me saying, I want to join the webinar last minute, and it's too late. We are full. Very limited spots remain. Link to register for the webinar is below. I look forward to seeing you this Friday. Moving over to Oracle, you can see on the chart why this legacy giant has completely transformed into a modern powerhouse. The risk here is very simple. They're spending heavily to build out their Gen 2 Oracle Cloud infrastructure, and this is to aggressively take market share from the legacy hyperscalers. That CapEx pressure scares short-term market retail traders, but look at the institutional order block supporting the price right now here at the current levels. OCI is landing massive enterprise database contracts because it's a faster and cheaper alternative. Analysts have been rapidly revising their 6 to 12 month price targets upward, forecasting a strong double-digit rally, while the 3-year outlook establishes Oracle as a premier cloud beneficiary. It is a highly stable legacy business model paired with a hyper-growth catalyst sitting right in the textbook buy zone. And like I've explained many times, when Meta and Microsoft and big tech giants raise their capital, they are basically paying companies like Micron and Oracle. Oracle is the cloud infrastructure. They're going to generate a lot of money, and people are scared of this big, huge backlog of CapEx spending on Meta and Microsoft. People are worried about Oracle's CapEx and their spending, but they don't understand that Oracle has almost $600 billion remaining performance obligations, RPO, contractually obligated future income set to take hold over the next 3 to 5 years as complete income. So even if Oracle didn't get any more clients and they shut the doors completely right now and they raise their CapEx to double from the $100 billion that it's at right now, $120 billion to $240 billion, and they get no more clients, that almost $600 billion still leaves them with over $400 billion in cash in the next 5 years. It is an absolute no-brainer of a stock to buy right now, especially at the current price. Now let's look at Bank of America, which serves as the ultimate institutional stabilizer for your portfolio. Unlike the high-risk tech names we looked at, Bank of America thrives in this macroeconomic environment, with the Federal Reserve signaling a higher for longer interest rate environment and floating potential rate hikes. Bank of America's net interest income stands to benefit immensely. Looking at the chart, the stock is showing incredible structural strength. As you guys can see how much it's rising beautifully, consolidating and moving upwards above key moving averages. Analysts view Bank of America as an incredibly safe, reliable bet over the next year, with solid upside targets paired with a robust dividend and yield and aggressive share buybacks. Over the next 3 years, this stock acts as an unshakable anchor that protects your capital, while the tech sector irons out its volatility. Bank of America is a cyclical play, and I've been selling puts on it because I personally want Bank of America, so I've been selling puts on it in the $54 to $55 range, collecting premium. Right now, if I was to be assigned, my average price would be around $54, which is really good, all things considered. But remember, there's risks in the market. There's no guarantees. It's very risky. Protect your capital. And remember, any stock that I talk about right now, make sure it fits your personal goals and needs. As the market is very risky, protecting your your capital and not losing money is priority number one. It's very volatile and it's very risky. You have to do your due diligence and study the charts to be safe. Before I look at the final stock chart, I want to give you a quick reminder to everyone watching this right now. If you want to stop guessing on these charts, if you want to learn how to identify these exact institutional order blocks, and if you want to master my proprietary AVP, D-Stochastics RSI, DFib, and Squeeze RSI indicators to trade with absolute psychological clarity, remember, I am hosting my free masterclass webinar this Friday, July 3rd, 6 p.m. Eastern, 3 p.m. Pacific. The link to get registered for that is below. Do not miss it. I'll be answering your questions, going over all of my strategies, and I have a huge announcement and opportunity that you do not want to miss. They're very limited spots. Every single webinar, there are thousands of students that can't get in because they don't register in time. Secure your spot. Link is in the information box below. Now let's pull up the final stock on the charts that I want to talk about right now, which is Starbucks. The retail crowd has completely abandoned this stock because of temporary domestic traffic slowdowns and weak short-term consumer sentiment data. But look at the chart. Starbucks has dropped into a historic deep value demand zone that has held up for years. This is a premier global brand with massive pricing power and an elite digital ecosystem. Analysts see this as a classic high probability turnaround play with a 12-month price target projecting a massive correction back to their fair value and 3-year targets, showing tremendous upside once consumer sentiment normalizes. You guys can see here a lot of recent support in $95 to $100 and going back into 2025, a lot of support between 82 and 90. Buying Starbucks right here at this technical capitulation line is exactly how professional wealth is built. Let me show you exactly what I'm talking about. I've been selling put options on Starbucks for the past 2.5 months. I've collected over $5 premium, selling between $98 and $102. All things considered, my premium right now averages me out to where I will own the stock, even if it drops to say 95 and I get assigned to my $101 puts right now, I personally would have an average price of around 93, 94. So my average price is sitting somewhere down here. Look at this. This is a pretty decent average. Now, it's not a guaranteed profit, but as you can see, it is my average price, and it's below the average capitulation since January of 2026. And if we were to draw a box going back all the way into 2024 and 2025, you can see my line sits smack dab in the middle of the average over the last year. So it's a pretty decent purchase price, all things considered. The yearly price target on Starbucks is around $107 to $110. So if I'm getting it at 93, that's still a pretty decent profit. This is a stock I personally like and personally investing into. Remember, do your own due diligence, protect your portfolio, and look at these stocks and see if they fit your own personal goals and needs. But Starbucks is a cyclical titan, and they have a very large market cap of over $119 billion. But this is something to potentially look at to add to your portfolio. Now, the bottom line is this. Successful investing is not about following the herd, and it is certainly not about letting short-term macroeconomic fear dictate your financial future. While the rest of the market is running around in a panic over inflation data, Fed rumors, and global tensions, the smart money is quietly execution-focused, building massive positions in dominant, highly profitable blue-chip steep discounts. While the rest of the market is running around in a panic over inflation data, Fed rumors, global tensions, the smart money is quietly execution-focused, building massive positions in dominant, highly profitable blue chips at steep discounts. The 5 titans that I charted out today give you the ultimate blueprint of potential safety and cash flow, as well as stability, with the massive turnaround upside over the next 3 to 5 years. Stop gambling on speculative trends and start investing with absolute precision. Don't forget the free masterclass webinar this Friday, July 3rd, 6 p.m. Eastern, 3 p.m. Pacific. I look forward to seeing you guys there. Link to get registered is in the information box below. And if you want to join the Discord, the link to join Discord is also below. Look forward to seeing you at the webinar and in the Discord real soon and on the next video. Take care of yourselves. Be safe in this market. Remember, there's a lot of risk. Protect your capital. Be safe. And the stocks I talk about, make sure they fit your own personal goals and needs before investing. Study and be safe. I'll see you real soon. Take care of yourselves. One love, fam.